And I think what we do is a little bit more like coaching sometimes than the standard real estate agent practice. We don't just do the transaction and disappear. I help people understand why real estate investing, how to identify the right property, how to modify, convert the right property, renovate the right property if necessary, what the tenant profile they want is, what the required renovations to get that tenant profile, how to analyze the right tenant, how to manage the property after the fact. All of those things we help people with. Some people need to understand the absolute 101 at its core. What is real estate investing? What's a refinance? How can you use those types of things to continue to leverage and grow properties? What does property management look like? How do you do a project? And what levels of renovation do you need to do to a specific property? All those types of things come into play for me as a real estate agent, but I think that's not necessarily the same for most. I consider it like putting tools on a tool belt. It's all trial and error, work history. I started in property management over a dozen years ago or so now. So just kind of learning by doing. With the original experience in property management, that absolutely helped understanding kind of people and properties and how the interactions with tenants and landlords, small repair things on properties, the large capital expenses required on properties. After I did some of the property management for a while, I moved into another role that was more of a deal analysis, deal searching. I worked for a small mortgage investment corp, and it was my job to place the funds, to find the good deals, to find cash flowing deals that were fairly heavily financed. So hunting for cash flow specifically was my job, my role at the next place. So I got a lot of experience there, looking at a ton of different markets. Even before I did Toronto in any serious capacity, we did a lot of the other GTA markets, the Barrie, Oshawa, Hamilton, as far as Windsor in Canada at least, and then we went to some American markets. Did some flips in Toronto back then. The flips helped understand the renovation side of the equation certainly a lot more, and finding a balance between how far to actually take it and where you stop getting value out of spending money on a flip or on your renovations in general. All of that experience led to building that tool belt that I can now use today to help my clients. I've never had the opportunity to buy an entire street at once. We were going up and down kind of an entire street of purpose-built duplexes. This guy was he bought paper from the 2008 financial crisis in the States and held that paper, and then eventually would renovate these properties and sell them to out-of-town investors like us. Walking up and down the street, I hadn't realized until we were done that he owned all of them. We were on a street of 20, 30 some odd properties, and maybe we looked at 3 or 4 of them, and I said, okay, cool, yeah, he's maybe got a few. This is his pocket. And then at the end he says, okay, which ones do you want? Excuse me? What do you mean, which ones? Yeah, the whole street. So that was interesting out of the States. The small multifamily, it's always what I've been doing, kind of sub 4 units and under. Price point was a big thing. I never really thought, and I think a lot of people never really think of Toronto as a viable market for cash flow. A lot of that stems from the large entry point. Like it is certainly a higher barrier to entry than a lot of the other markets, but people don't necessarily have an understanding of how strong the rents are. The Toronto rents are significantly higher than a lot of the other markets. And I think as far as pricing goes, a lot of those secondary GTA markets, the price gap has started to shrink as well, yet the rent gap is still quite significant. Another big thing for me is the tenant quality. When I think of a rental property and how I want to structure my properties, I'd like to try and rent to me maybe 5 years ago, 10 years ago, but kind of me as far as a tenant profile. I want people not necessarily sticking around in the property forever. I think there's advantages to turnover. So I want young professionals who are going to maybe move for their jobs as they kind of get careers or get into a relationship, families grow, those types of things, and not necessarily the family that's going to stay in the property for the next 5, 10 years. Downtown, I'm able to design maybe a little bit of a higher end product as well for the rental and get a fairly good quality tenant. As far as like landlord and tenant issues go, time now has been split about 50-50 from outside of Toronto and inside Toronto as far as my real estate and property management career goes. And we manage more here now than I ever did before. I've had more landlord and tenant board issues on the other half of the equation. So I think that speaks volumes as well to the tenant quality in the city. You learn a really hard lesson when you watch someone else resell your flip a few years later for a lot more money while doing nothing. Just letting the market appreciation do its thing, right? That's one of the strongest factors when we think about real estate investing is the power of appreciation and kind of on the leverage of your property, right, that you used on the property. The first flip I ever did, I mean, we learned a lot of lessons, so that was great. We probably made every mistake in the book and we still ended up coming out profitable, which was good. It wasn't very profitable. I think we might have made 20 grand or so at the end of the day. And it was a lot of work. It was a lot of hours. It was a lot of extremely late nights. And it was an amazing learning experience. We sold it in the high sevens. I think they sold it for 1.13 a few years later. The photos were almost the same. You know, it has a laneway. There was a basement entrance in it. It very well could have been set up as a duplex for us to keep, have a basement rental, have the upstairs rental, and refinance to pull more similar equity out of the property and, you know, take some gain, but still keep the property and then have some cash flow, have some positive rental income, and also have the market appreciation growth and continuing to hold that property in the future. Thankfully, those ones did sell to make a fairly decent spread, but then the risk was also very high. That was kind of the lesson number 2 for me from the flip side of things. Is it was a ton of capital to outlay for a fairly significant period of time. Thankfully, the market continued to move in our favor. Had the market not, and a lot of people that over the last few years tried getting their hand into flipping, things unfortunately didn't work as well. Having yourself with one exit strategy and having that much capital at risk for something completely out of your control, like the market taking a move against you, is not something I'm necessarily comfortable with personally. I think it's just a lot of stress. Maybe that is the core plan going in, but having at least a second exit strategy, being able to kind of pivot into a rental where things could cash flow at least neutral and hold itself in the worst case, and then you wait to ride back out the market before you consider a sale. If I were to consider flipping again, that's probably the approach I would take. One of the biggest surprises to me was actually a construction mishap where we were working with a client who was doing an underpin job. Now this was, you know, underpin, fully permitted, fully like the underpin contractor had apparently checked the layout of everything where all of the city drainage was supposed to be. And as we're doing this on a typical Toronto semi-lot, so they're not very wide, the neighbors are all very close. We had removed the rear wall of the basement, or the contractors, not me, had removed the rear wall of the basement. And as they did that, the excavator broke through the drain for all of the neighboring properties. They expected that to be in the front of the property, not running through the back, but this house had a laneway, and I guess all of them ran through the rear of the house. Between the homes and the laneway. Thankfully, contractors had good insurance and everything got sorted at the end of the day, but sometimes things happen, you kind of have to roll with the punches. This was back in the Hamilton days. We had bought a very, very highly cash flowing fourplex in a not so amazing area of Hamilton with 2 existing tenants, and one of the basement tenant of that property, he was friends with all the neighborhood cats. He let the windows stay open in his basement and let all the neighborhood cats come and hang out in his unit, to the point that, I mean, there's concrete obviously in the basement, and then they had the plywood subfloor on top of that, which I've learned maybe is not something you do sometimes, and then vinyl flooring on top of that, and they had clawed or chewed or worked their way through to the concrete. This was just the general, to give you a picture of the state of the unit. So I'm going in there to do a unit inspection one day, and I'm kind of checking around the place. And I open this one door and I just get hit with a cloud of fleas. The most uncomfortable I think I've ever been in my life. Completely just smoked with a cloud of fleas. The unit inspection stopped then as I left the unit, kind of in a panic, running around, swatting things all over me. The entire drive back, I was swatting fleas as they are jumping from leg to leg. Thankfully, fleas don't like to stay on humans, and I did not yet have a dog. If you listen to everyone's uncle, everyone's got some relative who has some terrible horror story about a toilet or something happening in their property. It's really not as common as people think. I think spending time focusing on putting the right people in the right units, doing the right renovations in the right way, a good home inspector is absolutely worth the money. Broadly speaking, it's a lot rarer than it sounds. It's just easy and fun to tell horror stories long after the fact. And there's a dollar value that can solve anything. You know, even when we look at deals, the house could be completely infested with termites and need to be torn down. If the math still maths, then the deal could still be great. One, I think I would recommend working with an experienced real estate professional and having a good power team, if you will, who can guide you in the right direction should you run into these issues. But I can almost guarantee you most of the time when you run into certain things that you would probably deem scary, it's more scary because you just don't know how to approach the situation, as opposed to scary because it's going to completely blow your deal up. There's usually an answer for most things, and hopefully you catch most things before the deal so that they can all be worked into. But with a decent contingency plan, you can cover most of these things. And I would also suggest that most people probably start not with the biggest project they physically can tackle. It's really good to start with maybe a little bit of a lipstick of a project, especially when you're dealing with older homes. Do one, get an understanding of how things work. Build kind of a book of trades and an understanding of how each different trade is going to work, what they need to do, what their piece of the puzzle looks like, and how to fix certain things, and then level up as you go. Take on slightly bigger projects as you continue to grow your portfolio. Don't start with, a complete tear down and rebuild, because you just don't know what you don't know at that point. You can find me at philgardner.ca or follow me here. That felt so lame.